Good morning, everyone. Microphone check. Screen check. Looks like everything's working correctly here. Good, good. Wonderful. Welcome, welcome, welcome. Hopefully everyone is able to rest up and get ready for the day ahead and all that fun stuff. As always, before we jump on the left side of the screen there, make sure to read through the Live Trade Room Morning Prep PDF. Very important to go through and understand everything that's inside there. I just want to take a quick second to give a shout out to our latest members that joined overnight. Thank you so much for the support. I'm pumped to have you on the YouTube family, on the SSFTG family. Always awesome to have new folks on board. If you aren't a member of SSFTG or a part of the YouTube family, check out the join button below the stream to gain access before the next private webinar, get access to the Discord chat, not to mention the awesome badges next to your YouTube name to show your support, and a boatload of other cool stuff. If you're trying to figure out what it is exactly that we are doing here, look no further than the Day Trading Academy over on SSFTG. It comes with about 19 plus hours of material loaded for you, and that collection continues to grow, not to mention the several more hours in the deep dive section at the bottom of that Day Trading Academy as well. Please keep in mind that the YouTube broadcast does have between a 3 and 30-second delay, depending on where you're logging in from. But if you want to level up to VIP status, you can enjoy exclusive permanent access to our non-delayed live analysis stream via Zoom Direct meetings, as well as monthly VIP webinars. There's actually one coming up this weekend. Private VIP events, one-on-one scheduling access, the list goes on, and that is also continuously growing. So whether you're here and you're totally new, or you're a veteran over in the VIP stream, welcome. I'm glad to have you here with me today. Let's take a look at some news, take a look at some charts, see what's going on, and with a quick side note, basically everybody in my family is down for the count and home. My wife is not feeling great. My daughter woke up not feeling great. My son, he's not feeling too great either. I'm okay for right now, but you know, just a heads up, I'm going to be home, and I had to take the entire afternoon off, and this morning session probably isn't going to be as long as normal because I'm going to be helping out around the house. So there will be some noise and stuff in the background with the kids and everything else going on. It's just one of those things of working from home, right? So keep that in mind as we go through today. Probably going to be an early close. Make sure to grab your morning DP levels. Those are posted for you this morning for the major 7 markets that we take a look at. And I'll give you an idea as to where the major turning points are. Don't forget, take a look at the news as well. See what's going on from the news calendar. This whole week has been completely abysmal in terms of news. And, well, today, hey, you know, it's better than what we've seen. We have 2 announcements. This whole week has been very, very light on the news. So at least we've got something. The initial jobless claims came out better than expected, 547 versus 617. We also have the existing home sales for March forecasted at 6.19 million. We'll have to see what that comes out at as 10 o'clock. Or as at 10 o'clock, whatever. However those words are supposed to go together. Get rid of that here. Let's take a look at the bigger picture and see what's going on here. There are a few different swing zones of interest that I'm paying attention to. But on the NASDAQ, the first big one, very obviously we have this really nice cycle going on. And the one thing that's been really messy with the NASDAQ is, I mean, we had this big rally up, new highs, then dumped all the way down to a new low, then rallied all the way up to a new high, and then rolled all the way down to a new low. This thing is just, I mean, it's a big old megaphone, right? But the bottom of that megaphone's not exactly expanding too widely, so it's more just a range than anything else. You know, as it stands, we're looking for a cycle back up inside the range, but the reason I like this more than anything else is we had a big cycle to the downside, huge volume node that built in right in here, and you can see what they were trying to do. We were talking about them yesterday, buyers buying the dip, or not yesterday, a couple days before, trying to buy that dip and getting the rotation up. It didn't work. They failed and they ended up going lower. But a lot of buyers will still be interested from there. Remember those infinite money hacks, the ones that can just print more. They can just buy a little more when it starts dipping down. And this becomes another zone of interest. Now, for a lot of traders, it will have taken a stop, and that would be indicative of what we would see on this move down. I think the problem is, though, yeah, I was going to say, I think the problem is I can't mark this up because that day's the one that's bugged on Ninja. So I can't really show it too well, but you can kind of see there is a nice little VVP breakdown once that market broke lower. Either way, we've got some pretty nice breakdown continuation, and a lot of times when you have that big node and a breakdown that doesn't continue, they end up rotating back up and coming back to that node as an area of support or resistance. They tried holding it as resistance. That didn't work. Now they flip gears and they're trying to hold as support. So I like this whole area as support. I would just prefer to see them dip a little bit lower down to where the rest of the traders are going to be hanging out at. We'll see if they can pull back that far, but I like that 855. Well, thank you, Cash. I appreciate it, Kashif. Me too. Fingers crossed that it doesn't go any further than just like a day, you know, but I appreciate it. Is there from time to time an echo? Not that I know. I mean, you might have an echo if you have the YouTube stream and the Zoom stream open. Otherwise, not that I know of. Can anyone else kind of not clarify, input? Whatever. I don't know what words I'm looking for. My whole schedule's been kind of thrown off today, so I'm a bit off. I don't think there's an echo, though. My audio looks like it's fine. Me only on Zoom. No echo here. In the beginning, there was a short echo. Okay. That might have been when I was starting everything up, but, I mean, I guess as long as it goes away. It's something to keep in mind, though. I'll have to keep an eye on how many things are being accepted as imports for audio, but either way. The next one is going to be on the S&P for a similar situation. But with the S&P, it's, I mean, this rally was insane. This just absolutely incredible jump to the upside. And the big thing that I liked on this, we have this big move to the upside, huge top-weighted POC. It was huge, and it rolled all the way back over. So when it rolled all the way back over, that would obviously demonstrate that the buyers took some pretty heavy profits. So much so that they put a top-weighted POC, probably going to take a little bit of a break. It doesn't necessarily mean that it's going to roll all the way back down to a low, although it did. But it doesn't have to. This is just another precursor that there's probably going to be a deeper pullback, along with the undertow and the 3-press wedge top and a million other things telling us that. But once we got that deeper pullback, buyers, again, they tried buying into that move, so much so that they moved the POC down to 41.57. And then it broke lower. Once it broke lower, same thing. We put in another big chunk of volume and we broke back up towards that volume node. I want to see what they're doing here. We broke back above it. Now it's being acted or treated as support. If it does dip lower, I'm going to assume that they're probably just going to backfill the current POC on this leg higher and look to bring it back up from there. Can you give a quick rundown of what you mean by POC? POC is short for point of control. Point of control is essentially the highest traded volume at price. Meaning that, as an example, here at 41.57, that price, more than any other price, traded the most volume that day. Therefore, that price is the POC. It creates zones of interest, zones of support. I don't use it that way. I use it more from a psychological perspective, but that's what it means from the hard set of rules, at least. I think you can derive a huge amount of context by where they base their POC, but I don't think it should be the only decision point. It's good to know what it is, though. Hopefully that helps. Over on gold, seeing if we can get a little bit more of a dip back to the downside. I mean, the big thing with gold is this is one of those things that we have on this pullback. And we know this is a pullback because it's accumulation volume all the way down and the POC bottom shifted. Who would have thought, right? Whoa, weird. They bought into a pullback? Whoa. Now they continued back up to the highs. So what we want to see is once they've made it back to the highs, what do? Right? Did they build a top-weighted POC? Did they get stuck? Of course, Ninja's being a jerk, and I can't drop on that high for some reason. It looks like we've got the POC that was kind of middle-weighted. So what I want to see here is let's derive some context from what the volume is showing us. We have 1778 volume. Originally, that was likely a lot of sellers, and it rolled up, came back, acted as support. So a lot of those shorts, if they were short, looks like they got out. Right? I believe myself included in that one. That dip right there led to that giant rally to the upside. So we know this is a break-even point. Along with this, if we bring this back just a little bit further to include kind of when they first bottomed out here, or even if we go back to the previous swing and kind of see what are they doing on this most recent leg up, now we can see we've got a bit more profit taking, but the majority of the volume is still taking place around the 78. So the zone of interest at the moment would be around 78. The reason I have my order down at 70.50 is predominantly I want to see them flush through that nearer term volume and dip down. Ugh, I hate that I can't put it on that last day. And then look for a flush underneath it to that VVP right back inside of here where that volume previously took over. I don't know if I'm going to get it, and it's a very greedy entry because it's super low. But that would be what I would like to see. The assumption would be that the risk is extremely low, but the reward is extremely high. Probability, therefore, is probably going to be not so great. But that would be the objective. You can get it to dip down there. If they start demonstrating support off 78, then that's an entirely different trade in and of itself. Crude oil, which is continuing to get this nice little wedge breakout to the upside. Nice rotation higher. Typically, when we're looking at wedges, a lot of times where the wedge ends up crossing, so if you draw these way further out, where they create kind of the crux, the crossing point, that's the zone of interest later on. But the thing is, this wedge looks like garbage. There's no other nice way to put that. It just doesn't look that good. I have a hard time believing that that's the wedge. If anything, I would rather go way up here to something along these lines, or to the narrower perspective like this, which isn't even a wedge. That would be more of a channel down here, which could also explain the support. So there's a few different ways that we can approach what's going on in the market as kind of a heads up on what's happening. But right now, either way, if there is a descending line of resistance, we've broken above it. And if there is a channel, we still have room until we hit it, which means that we've got some clearance. We've got some room for this market to keep growing to the upside. May not be optimal to buy way the heck up here, but there's still room. So, 1 second. All right, over on the euro, this one's pretty straightforward. My entry's even directly on top of it. I'm looking for a pullback to retest the previous stuck shorts who were down here in the 19,800s. The reason I like this area, well, there's a number of reasons. But we had this really, really nice range that formed inside of here. And what did we end up getting? A double trap outside of the lows. With that double trap outside of the lows, it just, I mean, rocket boosters to the ceiling. This thing went screaming to the upside. A lot of buyers were fanatically buying, so much so that we had an L1 pullback barely, and then rotated back up. But after the continuation to the upside, they really couldn't get much else going, right? We pulled back to the L1 momentarily, a quick little pullback pop, and then the next pullback just kind of dumped through all of them. So when we're dipping back here, we see that there is momentary support at the L1. They were given a chance to get out of break even. Support in the bottom of L1, they were given a chance to get out of break even. Another chance for break evens at the higher ones. Bulls on the L2, they had a move up 2-to-1. So the buyers on L2 were successful. It's messy. It looks horrible. But technically speaking, if they bought here and their stop was at the bottom of L2, it went up 2 points from there, and they have their 2-to-1 objective. Job done. So the buyers off L2 were successful. So the fact that it went through and then back up, I think this is mostly just break-even buyers who were trying to hold on for a bigger move, repositioning out. But the low side of this, now you've got buyers who are trying to buy it, and it dumped through them. It came back, gave them a chance to get out of break-even. Over here, we've got the bulls trying on the L3, and the L3 is the one that ended up holding, right? So that's kind of the mentality when you're looking at these areas. I want to see, how does the market respond to it when it comes back? Same thing over here, right? If we look at the earlier volume node, again, putting it in common sense perspective, giant rally to the upside. Why do you think a bunch of volume's coming in here? We've got buyers trying to buy the pullback, looking for continuation up, right? Obviously. But what ended up happening? Well, they pulled a note from the NASDAQ and vindicted the lows out before seeing that big juke to the upside. Given the response, it's very obvious that that stop run on the lows was accumulated. They gobbled that thing up like it was candy. And, ice cream on a hot day. The thing was gone. Right? And it went screaming all the way back to the upside. So with that movement to the upside again, buyers fanatically buying into the L1. But now we're starting to see this deeper pullback where we're getting L3s. Well, wait a minute. Why are we pulling all the way back down to L3s? This demonstrates indecision. I don't want to be a buyer on an L3 looking for it to go back to the highs. It doesn't make any sense. Trend buyers are L1s, L2s. Range buyers are L4s, L5s. L3s are usually a precursor or a heads up that something is shifting. We're seeing something shift right now. So seeing this come back to the highs and fall flat on its face, you can't really say it's much of a surprise given the context. And if it starts rolling back to the downside again, I'm not expecting the L3 to do much other than maybe allow them out at break even. I'm much more interested in the previous volume node back down to the L4, L5. Because if we look at this in context, these sellers were never given a chance to get out at break even anywhere. Right? I mean, this thing just gone. So if they were short, game over, right? I mean, no remorse all the way up. And if they're still short, that's where they're looking to get out of everything, basically. If they built in more shorts, if they have extra shorts up here, if they're still short from down here and didn't do anything, everybody's looking to jump at 19.8. So am I. I don't know if it's going to get down there, but we'll see. Over on Bitcoin, nice descending wedge. We also have a potential Mac whack, although it's very dirty and kind of gross looking. This could look significantly better in the sense that, you know, typically you'd prefer to see 3 lower lows. This didn't have that, and we kind of ended up doing the divergence a little bit sooner off of this low. The only reason why I like this is, well, because of that. Right? I mean, that thing was like a sniper, just bounced right off the low. Perfect. So it might look really dirty and really messy, but that's the one that I have to go off of in terms of the patterning. So from that patterning perspective, we do have buyers attempting to get a continuation to the upside, and we're seeing them demonstrate that support. So it's looking pretty good. We still have room to grow to the upside to the top of the channel. At worst, we have a range, and they just failed off the lows of the range. Right? So even if it does dip back, it's just going to be buyers down here anyway. Major upside objective, at least back to the range or value highs around 56.5. That also lines up really nicely with the top of the channel. Looking good. Ethereum, nice ascending wedge to the upside. The thing that I'm not a huge fan of is a break of the ascending wedge up. Having a bullish pattern break bullish, very difficult to maintain that amount of strength. That requires a huge shift in money. That requires massive capitalization to keep it going. Not that Ethereum can't get it done. I still think Ethereum should be worth more than Bitcoin. Just my 2 cents. I think it has more value. But that said, well, you know, the market doesn't think so. It's at 2,500. But this bullishness to the upside, I mean, it's not unheard of. It could happen. It's just tough. Right? I don't want to be a buyer way up here. That's the hard part. All-time highs, breaking above a wedge top. That's tough. Now, along with that, if we look at this from a channel perspective, if this does end up being a channel, which, I mean, let's be fair, that is supporting that channel base really, really nicely. Held up great. Upside objectives, not too much further to go. 26.15s or so. We'll see. We are breaking significantly above the wedge on price, but the MACD, that's another big clue. If we start seeing this churn back to the downside, Ethereum might have just gotten the case of the overblows. They might have to pull back a bit. Looking at the NASDAQ from the bigger picture, the previous all-time highs, I think it's fair to say that we've got our 1, 2, 3, 4, 5, 6. Today would be the 7th day, tomorrow the 8th. Maybe we end the week on a Friday getting chopped up on this so next week we can detach. But this is what we've seen historically, and it's following through with exactly that. We hit the all-time highs, they broke above it, but they failed to continue, closed back underneath it. That usually means that you've got something along the lines of a back and forth for 3 to 6, 7, 8 days-ish. It initially looked like 3 when it was breaking away, but then it just got sucked right back down to it. Now we're on day 7. So, as far as a breakout timing is concerned, pretty close. We also have a nice dip back to L1, which was very obviously supported. So, given the context here, we've got an L4 rotation back to a new high, and L1 buyers are very aggressively accumulating into it. Looking at the bullish context, and keep in mind this is a daily perspective, but from the bullish perspective all the way up to the highs, let's see what this volume looks like. This might take a second to populate that volume, though. Daddy? 10 minutes until the open. Maybe I can shift this to minute. Will that help it? No. All right, well. Either way, I'm curious to see what the volume looks like. My one assumption... Oh, well, there he goes. Right as soon as I draw the drawing tool thing, it pops up. My one assumption is that there was going to be a VVP above the highs because it broke out so aggressively. Stop runs, right? Stop run there. Stop run there. Stop run there. Another stop run. Pretty big one, actually. So a lot of stop runs on the way up. That's important to note, but notice where the POC is. The POC is still down here. So the assumption is that the buyers who bought on this dip, well, they're still long. And what are they doing? Well, initially they were taking profit on the rally higher, but now, okay, it's getting a little heavy up here, right? We're seeing some issues. That VVP pullback back to the L1, something like that. That would also allow a two-legged correction down. It would just be a lot healthier for a deeper dip is essentially what I'm getting at. I would love to see it go all the way back down to these 850s and get back down to the POC, but I just don't see that as a realistic objective. Makes more sense to see a pullback to maybe the 13,400s. Current all-time highs, 14,059 half. Looking at the 60-minute perspective, got the continuation up. We can see a little bit more of a refined picture as to how they vindicted that L1 so terribly. They bought it, got the nice bounce. They bought it again, got the nice bounce, gave up on it, didn't let them get out of break even, dumpstered all the way back down, dipped down into the secondary portion, tested it again with a final trap, and then rolls all the way back up on an engulfing bull bar with a wick test underneath the major swing low. Man alive. Talk about Hunter. just this thing just ripped its head off. Now, it doesn't necessarily mean that the bear trend is done. We could easily see this turning into a little bit more continuation. And in fact, that low lines up beautifully with it. Now, as far as a channel is concerned, that was not parallel. Let's try that again. There we go. We can see that we've got some room. Right, so we've got some distance back up to the 14,000s. That's the objective anyway. And all those opens, closes, we know there's a couple POCs up there. That's a big objective. The problem is it's a lower high. So if the bulls are going to keep this going, a lower high is a problem. Now, again, thinking from the hunter's perspective, right, what I would love to see would be something like this, where they go up, they poke around it, and go, bam! Really fast flush down to the top of the L1, big wick, show support, immediately reject out of it. That would be a phenomenal trap. That would wipe out all the ETH stops. That would dip back into some of the previous day's entry defense longs. Everything stacks up there. It's just a matter of whether or not it actually happens. One other actual consideration before we get rid of the 60-minute chart. Well, now let's look at it on the 15. The 15 will give us a little bit more definition. Yikes. Let's start over here. So as far as the overall movement is concerned on the way down, what I want to see is, first off, we have this L5 rejection off of the top. That's a qualifiable reversal, right? That's great. We've got bears coming down, L3, more bears off of the L1, L2, more bears off of the L2. Actually, this right here, that's exactly what I'm talking about, what I want to see right there. Where it's like, yeah, okay, no, yeah, they got proof. Boop. Get that quick little tap. That's right there. Anyway, I digress. Let's keep going. We've got more continuation to the downside. They're holding L2s. We have another quick L2 tap. Breakdown for an L1, 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 and then we get this trap on the lows, and everybody gives up. And this is the important part, these factors here, because they shot through it, but they were given a chance to get out of break even. They shot through the highs, right, all the way up to L2, but they were given a chance to get out of break even. They went above the top. They were given a chance to get out of break even. So what this is showing us is that nobody's really stuck except these guys. L3. They broke above, but they have not been given a chance to get out of break even. So as far as a zone of support, the retest of that L3 on the bottom side at least becomes very interesting for swings, etc. Right there becomes a big hotspot. Now, what would make it even better is if we can confirm volume inside of there. So if we drag the volume from the bottom to the top, Oh, oh, oh man. Candy from a baby. Big old VVP setting right up on top of that. Tasty. And a POC underneath it for defense. I mean, it's hard to ask for a much better zone of support for the bulls, if they're going to take it. The obvious concern is that the last breakout above the highs was pretty terrible. But, you know, you'd appreciate a bigger one. But if they're going to hold it, that's the spot right there. It's back down in the 875s. Make this incredibly obvious. Stock exchange open in 4 minutes, right around the corner. See if we can get some rotation. A couple other markets that we were talking about on the crypto side of things. Tron is setting up for a 4-hour long. 4-hour long in the sense of some really nice potential continuation. Although I would appreciate seeing it go down to the 10-cent mark, which is why the risk is so small. Essentially, it's risking about 8 to 9% on the downside if it breaks through the 11.5-11 cent mark for an upswing back up towards 17.5. So, I mean, it's a phenomenal reward versus risk. It's just, it's potentially very early, so it has to be high reward in basically minuscule risk, because if it does slide down, then it opens the door for, you know, a move underneath 12 cents all the way down to 10, which might not seem like that much, but that's like a 20%-ish drop, a little under. It's a pretty big deal. So I don't want to sit through a 20% drop personally. I would rather try to, you know, sit through maybe 8 or 9. That's okay, but much past that, no thanks. So Tron is looking really, really nice for a potential continuation back to the upside. It's just a bit early to the party. All right, so here we sit looking at the 500 tick. We have the Asian session, which had a decent amount of continuation up. They went about 1.5 deviations up before rotating back down deep into the Asian session, but never piercing through the low. The Euro session had a rotation down that was a little over 1, and now it's continuing back up. So the deviations are, I mean, normally you'd expect 1.5. They only went 1. Buyers are getting a bit more aggressive down here, but, you know, the open in 2 minutes, that can definitely throw things around. We'll see. I would still prefer a deeper dip. Nice bear bar. See if sellers can get a bit more continuation through the settlement price, 13,900s, 902 in this area. The other ones of interest we had talked about yesterday. That was Binance BNB. That was the continuation for a move back up, which worked out beautifully. That was this dip down here in the 540s. But if we're looking at it from a POC side of things, BNB, that's tough. That's real tough. We're butting our heads against it right now. In order for me to get interested in this, I would like to see it break above and then come back as a pullback. That would make much more sense. The other one is NEO. NEO's big zone of interest is in the 94s. It actually went all the way down to 91, but since then has bounced all the way up to 105 plus. So huge move back up. Incredible bounce. See where these bad boys want to go. Markets open in about 20 seconds-ish. All right, 9:30 open hits. Possibility that this dip underneath the 895s is a trap before this rotates all the way back up. Remember, the Asian session lows have not been broken. And very typically when we have a continuation, although the Euro session is down right now, if they start churning back inside the Euro session, that would give us a big clue that this is going to reverse. Notice again, though, what we've been talking about a lot recently is what side they're holding on the Euro session. It's resistance right now. That usually means that they try to continue down a little bit further than you would expect them to. I would expect them to churn down to 875, but my entry is at 855. It's a method to the madness, right? Nice bull bar back up. If we look at this previous drop to the downside, that will give us an idea as to what's going on from a volume perspective. Oof. This is definitely creating some problems for them. And from top to bottom, the POC's up here. Great success. So far, sellers have the heat. They're holding underneath the Euro session lows. They're holding underneath settlement. We don't have the first 5-minute bar in yet, obviously, but market's still just kind of hovering here. 875 is the first zone of support, but again, the expectation is that it slides a bit further down. We've seen the volume from the earlier, assumably buyers who were trying to buy the dip down in the 903.75s. They couldn't get the job done and slid underneath. Tried getting out of break even on that move, rotated back up, and, well, they obviously did not defend, and it's rolling back over again. Pretty big problems here for the buyers. First 5-minute volume so far at 13,900. Couldn't quite get that 3-press low either. Now, this is where I'd be very interested. If we get a quick run up to retest 903.75 and it starts showing or demonstrating immediate rejection, my eyes are definitely peeled. 892 seems to be the point at the moment. It's still viable, but we're on day 7 now of that previous all-time high. I deleted mine personally because this is the point now where within the next day or two, maybe after the weekend, that makes things a little bit awkward, but you would expect to see it get out of this funk if it's going to follow through with that. So doesn't mean it will, of course, but a lot of volume still stepping up in the 92. Ooh, POC shifted down 91.75. If we drag this forward and see what's going on, you can see they're trying to get accumulation going. No downsided POC yet. So if we rifle back above settlement, back above the 902s, 903s, I mean like a halfway decent move, nice little pullback for a continuation bounce back up. All right, first 5 is behind us. Let's see here. Where did that volume land? 91. Watching this run up. They're fighting over the POC of this move down. More volume building in the 92s. All right, as far as the S&P goes, the first 5 on the S&P. Puts its volume cluster right there at 5750. Almost down to that 52.75 for it. Not quite. Quick little break below the lows, and man, they're building a ton of volume back in 96 again. Now we have a POC that's downshifted. So the POC is now down here. We're breaking above that volume node. That would suggest buyers giving it a shot down here on this pullback to the 92s, 91s. It's super early for the reversal, though. You'd prefer to see something where it breaks away and then comes back to it, which they're trying to do. Sellers will be watching this 93, 75, 94 area for likely more on the scalp side. It's short in a bull market. And then if they can break above those 4s in that area, then realistically that is going to be the launch point, right? Break above it. I mean, that's the POC from before. That's where everyone was potentially stuck trying to hold the market down. If that fails and goes higher, it's game over. Watch the longs on this dip for a potential continuation play with buyers looking for a bounce back up off the base. Risk is relatively light if it cracks underneath this volume node at around 92. Big pop in volume at 96 again. Holy crap. All right, I'm going to reduce on that big chunk of volume just to play it on the safe side in case it's going to hammer back again, because the market's staying underneath it, and that's causing some problems. Get back above that volume. 96 volume is causing some massive trouble. Get on up there. Ooh. All right, I'm out. No thanks. That couldn't get the job done. Now I'll wait and see if they can break back above this volume node for that cleaner appearance. What is your lime colored level at 13,875? 13,875 is that huge VVP zone on the NASDAQ 15. It also lines up with the L3, which lines up with a psychological point of interest. Earlier traders could not get out at break even from there, who were trying to short there. It all stacks up at 875. Which is why I'm not willing to sit through much of a pullback on these longs, because Honestly, it could easily pull down further. Volume rejecting again off of the larger POC. Oy. What a fight. They're still holding it down. Big bear bar, too. Whoa. Whoa. This is either going to be really fast to go or a huge trap. Really fast to go. 875 volume support for scalpers. Not really much else, though. Quick little scalp bounce for 10 plus. Pulls right back down again. S&P. Now, as far as the S&P goes, the way that I'm approaching the S&P is more in a 15-minute perspective. But with the way that it looks on this move higher, you can very obviously see why I like this zone. But in terms of support resistance, upside objectives would be very... I mean, it would make a lot of sense to go for a 2-to-1 back up towards these highs. 6250 is the objective for the S&P. NASDAQ on this continuation drive down, finding a lot of support off 875. Whoa, crude oil just got whacked. What happened on crude? I'm curious. I'm very curious. If they're pulling back this fast, where was the POC on this down move? Drag it the rest of the way. I mean, honestly, if the buyers are going to hold it, 6110 looks like the favorable point. So 6110 would be the zone of interest. As far as the breakdown, I mean, realistically, it shouldn't be able to break down much further than 6037. If it does, I'm just flat out wrong. And as far as the upside objectives, making sure that this is as optimized as possible. 2-to-1s are inside some of those swings. I would prefer to get that a little lower. There we go. That's better. Now I'm curious, how low do we have to get this to line up with that? 60.99. Okay. A 1% drop on crude, though. 60 ticks. It's not terrible. As far as upside objectives go, that at least gives us our first objective inside the major swings, which would be right there. And then the second target a little bit further up. S&P's just kind of rattling around, not doing a whole lot. NASDAQ still rattling around, not doing a whole lot. 875. Again, this is where swing longs, options, calls, etc., they're going to be buying the dip here because this is where everything on the 15-minute perspective at least stacks up almost perfectly. The only thing we don't have is a short-term transitional phase. Right, preferably before you get into a move, you don't expect everything to turn into a V-bottom. That'd be nice. After you get in, it just goes rocketing the other direction. That'd be great. But more often than not, it ends up doing this kind of stuff. Right, so that's what I mean by a transitional phase. We haven't had that yet. So far, it's just one big dive down. $62.50 still makes sense. Gold just kind of messing around. 15 minutes until news. We do have news today. That's a pretty big caveat. Ooh, big heavy bear bars. Selling pressure coming in down at these lows. Seems like the support at 875 is just a bit too much. Scalpers will be looking for a quick little flush here underneath like the 77s or so. Couldn't get that one. There we go. Looking for a continuation pop back to the upside as it nears back into the 75 zone of support. Yep. Big pop back up. First objective. Now let's see if they can finish the job. What a horrendous bear bar. Quick little snap underneath the lows. Come on. Drive it through. Oh, there we go. They pop through. Don't fail back down. They fail back down. That's a problem. This bear bar doesn't prove anything. It's got to close. That's why you wait for the close. Want to see it rotate up sooner than later now. It's running out of time. We've juked enough volume up here. Give me a quick snap up into those 80 quarters. All right, I'm going to jump ship here. I'm not necessarily believing that this is going to have enough to even get me out at that break even before a slide down. The buyers just aren't showing up. This is the concern, right? We know that there's larger objectives down. I'm not going to flirt with disaster here. It's at plus, it was at like plus 13, plus 14, and then all of a sudden now it's at plus 2. Like, whoa, crap, what? Kind of curious to see where they're going to hold these candles. We've got that possible inside wedge. Oh, back down again. Oh, there it goes. That would have nailed everybody's stops on the bottom. So keep an eye on the volume down here. We have an obvious stop run. They found a little bit of absorption in the 66s. Looks like they got quite a few stops down there. Oh my God, Cat, what are you doing? Get down. And on the NQ 15-minute failure at the top, would there be a bigger pullback at least to an L2 to tag a POC? Well, and that's kind of the concern. You know, this move isn't supportive of the L1s or any really aggressive buying. So the assumption is it's going to go down to the next one. Depending on what time frame you're looking at, might be an L2 and L3, but somewhere around there, just better. I would love for them to come back to the POC at 855, yeah. Nice accumulation phase, a little bit of a blow-off. If the market goes screaming back above the 900s, it's still definitively viable for longs. Major zone of support here. S&P attempting to rotate back up. Again, the objective on the S&P is up at 6250. As far as actual risk, though, 2-to-1 actual risk is at 5675. I wish I had multiple contracts because that is a very likely objective to take profit in after that big drive down. I don't think I want to fight against that. I'll see if they can push above it. I want to see what the initial response is. I want to be the first one to jump. You know, in the event that they pop through and try to grab 5750 or something a little bit further up. 6250 is still the objective, but we've got to understand that 5750 is a volume node. We've got settlement just above that. There's a lot of crap in the way before it gets up to 6250. So if we start hitting 2-to-1 objectives and it's showing resistance, then, I mean, hey. Doesn't look like it's ready yet. Ooh, NASDAQ getting a slide down too. 855. Grab that little blow off underneath the base. Bruh. Really? It went to 55.50? I mean, okay, sure. I don't mind the way that the S&P is looking, but again, this is from a bigger perspective. I'm just zoomed in really close. I'm looking at this from a base hold down here that's looking to continue back up over a bigger move way up to the top. But if it gives me a reason to believe like this, we barely had to take any heat on this. So if it's showing that there's 2-to-1 objectives or locations that would make sense to move our stops up to, lock in, protect profit, etc., I definitely want to pay attention to those areas, especially when they line up with a bunch of other resistance, given that it's a range. It's NASDAQ. Oh, the salt in the wound. Where did they dip back to? Almost. They almost got 55. Oh no! There it goes. All hope is not lost, although it is incredibly frustrating that it missed my entry at 55. But if we do get it might still come back down and still show a really nice baseline of support here. So by no means am I expecting this to be done migrating around the lows under normal circumstance, at least. The market doesn't just V-bottom typically. Now, that said, if it does, you got to be prepared. So if it goes screaming back above and chops through that 896 V, the volume, the POC on the way down, then realistically you'd expect to see a pullback. All of those shorts who were trying to defend to the downside, which we saw them come in over here, so we know those are shorts. All of those shorts who are in profit territory right now and they're taking profit, we see that in volume, they would be underwater then. And they're not going to want to be underwater for very long. So as soon as it comes back to break even, that volume flush right back up. That is honestly probably a better spot in the sense of responsiveness. Down here is still pretty early. Although responsiveness was pretty good, I just missed it by 2 ticks. Go figure. Now, some people will utilize that as a bit of a warning. Like, hey, they missed your entry by 2 ticks. If they come back again, they might blow through it. So in terms of a risk standpoint, if I were looking at larger risk, I would probably reduce a little bit. I don't know that I would want to go in full bore anymore. And actually, with that in mind, let's demonstrate with the NASDAQ, the micro NASDAQ, actually. So down at these lows, We're dealing with a micro, so we're able to build in a little bit. And I want to be able to get up to 10, which is one full contract. But I want to allow myself a bit of flexibility. I don't know where the market's going to go up. I know this is a major zone of support from the 15-minute. And I know, generally speaking, my risk is going to be around like the 847s, 45s if it can't really hold up and starts breaking through. But we can also utilize this as good timing. The ability to give us some better entries. And if it just goes without us, at least you got the one micro, you know, hey. Woohoo. Let her rip. One micro's better than no micros. Always be thankful for what the market gives you. Because if you're not, it'll take it away. It's really quick to take it away too, man. It'll usually take twice as much. It's greedy. Gave you 5 ticks. Don't be upset by that. Thank the markets. You don't want that bad voodoo over your head. Come on now. Little more continuation. We got to get back above these 875s. But if they do want to crack a little bit lower, we've got all of these zones of interest down here. I can't believe it couldn't make it to the 855s. That's so irritating. But on the other side, it also allows potential to look at stuff on the micro. Little flexibility. Back up to those 875s. So then why didn't you have your order at 855 quarter originally instead of the AOI at 855? It's one of those things where when we're coming down to backfill volume, remember this is volume. This isn't a scenario where it's a trend line or something like that where it's a bit of a gray area. Although sometimes it could be, especially with multiple distributions. But in this case, around 855, it's there's nothing even close. 855 is the big volume node. So if there are sellers who were stuck from earlier getting out, then that 855 point of interest, I want to see it fill. I want it to go through and actually physically give them a fill so I know that objective is done, right? That's why I'm such a stickler on that entry at 855. It sucks in this case because it missed me by 2 ticks, but that's why. That's the reasoning. I need them to get filled in order to back up my trade. You could even go 1 tick underneath it, but then I feel like you're just playing with fate. And you're never going to get filled then. I know my luck. All right, S&P is above the 2-to-1 area. This is 2-to-1 actual risk, 57.50 also testing. So given the movement up, I know I'm probably going to get stopped out, but I'm going to lock in the 2-to-1 actual just because we're hitting so much crap. And if it wants to drive through, great. That's awesome. We'll keep riding up to 62.50. But I'm at 2-to-1 actual risk. I'm not going to give that back. Micro NASDAQ making me wish I took it on the full NASDAQ. It's all good. But this is a really good example of why building in can sometimes allow you that extra little benefit of the doubt. Taken out in the stop for the S&P at the 2-to-1. Because, you know, like we were saying, 1 micro is better than 0 micros. This is why. Here again, we've got the 2-to-1 actual risk, which is hovering at 79. So I was only able to grab the 1, but we'll let it go. If it wants to rally all the way back up, the upside objectives on the NASDAQ from this bounce, first off, they're going to have to fight through 9. Well, that wasn't nice at all. Really? Okay, well. Guess I'm out on the NASDAQ before the news at 10 o'clock. Good thing, too. Jeez. Maybe. Wow. Bunch of volume came in at 10 o'clock. News at 10 o'clock. This is why I did not want to give up the 2-to-1. It's not worth it. Now it would be all the way back to break even. I don't know about you, but I prefer plus 17 or 16 or whatever it is over plus nothing. Buyers might utilize this previous bull bar as a way to buy in underneath 41.53. It's a bit weird given the timing on the S&P, but buyers will likely be looking to pick up underneath that bull bar to try to get it to rotate back up. We're going after 10 o'clock, though. We've already had a relatively decent day of trades so far. The S&P is done, and I believe I am flat across the board now. Yep. Crude oil didn't get the dip. Cancel that. Euro, nope. Gold, nope. All right. I'm going to cancel all of those. So let's move into training time. Again, today's going to be a little bit early, but I'm going to duck out and try to take care of home base here while everyone is down for the count. Somebody's got to be alive and conscious. So we'll head into training time. We'll duck out a little bit early, and I'll take care of the home front on this side. Let's get those final questions in. This is that dip on the S&P underneath that previous low. I'm a bit too distracted to really want to play scalps right now on the S&P that could potentially blow off the low, so I'm going to dodge that one. Man, that one's good. It's that C4 energy drink, which, I mean, I know it's going to kill me just like everything else, but the frozen bombsicle one, it's really good. Hey, C4, you hear that? Sponsor. Sell out, sell out. What does profit taking look like on volume? Great question. So profit taking, right? If we look at the way that volume operates, let's assume that I buy 100. Let's do 100 shares just to make life easy. I've got 100 shares of stock XYZ. That's what everybody uses, right? So I'm long 100 shares. It's supposed to be an L, but I know it didn't look like it, so I drew an arrow of 100 shares of stock XYZ. So when you're taking profit, what does that look like? Well, let's say I take 80% of my profit, right? So I take an 80% position wherever, here, sure. That would look like 80 shares. Well, what does that effectively mean? Well, effectively, that means that I only have 20 shares left. So if I'm profit taking and I take profit again, let's say I take another 10 shares, I've only got 10 shares to take profit on. I have less. So, with that in mind then, profit taking would be decreasing volume. The market is increasing in price while volume is decreasing because they have less and less and less and less orders to take profit on. Pretty straightforward when you think about it, but it's kind of hard to think about it at first. It's one of those things that once you see it, you can't unsee it. So, and then the same thing, the inverse would be true, where if it's absorbing it, right? If they're accumulating, if they're selling into that move, then realistically, this would just be the inverse approach. The market's going up and volume is going up. That wouldn't make sense for profit taking because they have less. Less contracts doesn't equal more. It's not how that works. That, not math, 1 does not equal -4. It doesn't make sense in here. So this would demonstrate accumulation. Or it could be a buyer from a much larger picture taking profit too. I mean, for whatever the reason, though, there is larger selling taking place at that point. You don't have to know why. You can try to build a story around it. It's helpful, obviously, but What about VVPs lower on the NASDAQ? It depends on when the VVP forms. If the VVP forms during a, well, let's use the real market. Why use my Picasso skills? As an example, I don't even have to draw the volume on here. I guarantee you there is a VVP right there. I don't have to draw the volume there. I can see it. It's a very obvious stop run. So if we look at that then, if we know what that is, right? We know what the lifeblood of that is. Let's go down to up so that nothing is previous that would be encompassing that price. And let's see where a VVP shows up. Whoa. Weird. Who would have never thought? So those are typically, when you have an upswing breakout like that, that would be indicative of a stop run. And then when it finally finds some volume, that's usually where the stop runs finally found enough orders to stop running. And then they usually build that secondary node. And this is the decision point as far as I'm concerned. This is where they're going to decide, does it fail or does it continue? The volume that forms above that POC. Right? On that breakout, that big VVP break, what happens? What did we see above the highs? Profit taking. As we increase into the next day, can't do that now because I just moved the stupid thing. Hang on 1 second. As we drive this a little further forward, before it breaks out again, I don't want this next breakout, before all of that happens. Look at the amount of volume that built up here. POC still down here. So we have to go backward. Even if I was short, and even if I was assuming that these shorts were shorts, they're stuck. They're in danger territory. And if I'm on the other side of things and I'm assuming that these are buyers, which I would be measuring from over here down, I wouldn't be measuring from down up. I'm assuming already, by the way that I'm measuring, that these are sellers. What do we have? Accumulation volume. Volume is proving to us that these are sellers. Those sellers gave up there. That was the end of the line. Nail in the coffin. Period at the end of the sentence. Done. So that would become a zone of interest later on if it ever pulls back that far. I don't know. But I love looking at those previous swings. If we go, like, as an example, from the top to the bottom, only the top to bottom. I don't care about the stuff that happened in the middle. And I want to see what happened on this, right? I know we've got some weird price action. That's because this day doesn't calculate right. But we've got the POC cluster, which is right here. Well, I mean, it's at the bottom of the swing. What do you think they're doing? I mean, let's be logical here. They're probably buyers. I think that's fair. So when it fails and breaks down, what do you think they're going to do when it comes back? Right? They were long. They're buying. They got a nice rally up. Maybe they take some profit. It is decreasing volume after all. But when it breaks back down through their break even, if they are still long, what do you think they're going to do when it comes back to break even? They're going to GTFO. They don't want it anymore. And that causes that giant slide to the downside. That's why I love watching these areas. Even days after, they can still be massive zones. That's why this weekend, for VIPs, the webinar is going to be all about order flow because it's a huge context builder. There's so much information in the volume, it's insane. Especially these days with the micros and a lot more traders trading from home, a lot more retail traders, etc. The psychological aspect that you can derive from the volume is insane. Is there a chance that the NASDAQ will break below 855? Let me zoom back into a nearer term. I mean, never say never, right? Is it possible? Yeah, there's always a chance. Just like on out of 81 candles on a day, the 80th candle has a 99.99% chance of being the higher low of day. Not 100%. Never 100%. Yes, it could go through that low. If it does, would I want to be a buyer anymore? I guess I suppose on how it's. Man, I can't even speak. It depends on how it responds to it. You know, if they do break through the lows and it just boom immediately snaps out of there, then yeah, sure, I wouldn't mind being a bull again. But man, with this big V bottom that they're demonstrating right now, I don't know that I would want to see them go much below 75. You know, I don't know. Dipping all the way back down to 55 might make me, that would make me nervous. I would rather wait for the dip to happen to 55 and see what happens and then respond to it. I'm okay being late because the risk factor involved in it now rather than before is way higher. Does it really make a difference putting on, for example, if you move your exit to point of entry as if the market would avoid or go towards it? Not necessarily, at least not from the 500 tick perspective. No. I mean, yeah, algos will hunt those all day, constantly. 100,000%, yes. From an algo perspective, it definitely makes a difference. From a human perspective, having the chance to actually respond to something like that, nah, not really. A lot of times those break-even points, those point of entries, those entry defenses, those zones of interest, when the market comes back to them, I'm usually not going to be the first one to the party, or if I am, there's a heck of a lot of context behind it. What I would rather see is the market go up, hit the point of entry, right, as a little bit of proof, and then, give me a candle or something that I can utilize. Will the market migrate its way down towards a previous POC from days ago? You definitely better believe it will, especially if it's showing that the volume is there. Those areas tend to act as magnets as long as the volume is supporting that purpose. Right now, we had accumulation volume, but their point was at 896. Right, so if they're longs, they're underwater right now. This is a bit of a problem. So that's why I said, if I wanted to be a buyer, I need to see it spike above it, right? Go above it, prove it, then pull back and buy it. From this perspective, though, if we start seeing sellers coming back in, I have to believe that those were buyers who were long that are jumping ship now. And that could potentially cascade and move all the way down to a new low through 55, and then it goes back to Cat and G's question, goes catatonic to the downside, and I don't want to be a buyer. So context, again, is a big factor. But more movement down. All right. Well, that's going to do it. Like I said, wrapping up a little bit early. Going to take care of home base over here with everyone sick and not feeling good, and that's never a fun time. But that'll do it. As per the usual, you'll be able to watch this back whenever you want. You can rewind it on YouTube and watch it at your leisure. Otherwise, though, if you have any questions that I missed, feel free to shoot me an email, jhb@ssftg.com. Enjoy the rest of the day. Hope you had a great one, and we'll see you all back tomorrow. Right? Enjoy. Rest up. We'll talk to you all then. Thanks.